We can see your slides already.
Okay, so good morning once again. So as a summary of this week's topic, which is basically on financial markets, first we will define briefly what a financial market is. Next slide, please. As stated, it is a marketplace where trading of securities occurs. So there happens a buy and sell of securities. And when we say securities, examples of these are stocks, bonds, and derivatives. So the one being traded here are actually financial assets. So not the same to the typical markets where buy and sell of physical product occurs. This kind of market trade a company's ownership, a money's instrument, and etc. Next slide, please. So it is being said that financial markets are critical to the smooth operation of a capitalist society. Why? First, because it allocates resources and creates liquidity for business and entrepreneurs. Second, it helps in the creation of wealth and provides a link between savings and investment. And third, it makes it easy for buyers and sellers to trade their financial holdings. So technically, financial markets bridges the gap between those who have the excess of money with those who are in need of money. So moreover, it also provides opportunity for the public to invest their savings in attractive securities which provide a high return. So it literally has a big impact to economy as it enables the country to achieve economic growth as capital formation is promoted. Next slide, please.
So, good morning once again. To fully understand financial markets, let us identify the types of it. There are five types of financial markets, namely stock market, bond market, money market, derivatives market, and forex market. First, we have stock market. A stock, by the way, is a type of investment that represents an ownership share in a company. When you purchase a company stock, you are purchasing a small piece of that company called a share. So, a stock market is a place where investors go to trade equity securities like common stocks. Next, we have a bond market. And when you say bond, it is a loan to a company or government that pays back a fixed rate of return. So basically, a bond market is the arena in which investment in loans are bought and sold. Another type is money market. A money market is a short term lending system. It is usually used to cover operating expenses or supply working capital or the daily necessity for businesses. Next, we have a derivatives market. Is a financial market for financial instruments such as underlying assets and financial derivatives. And when you say derivatives, it is an instrument whose value is derived from the value of one or more underlying, which can be commodities, bonds, stocks, and etc. And lastly, we have forex market. A forex market is the market in which participants can buy, sell, exchange, and speculate on currencies. It is the largest and most liquid financial market in the world. That would be all for my part, and Honey Lou will now take over. Thank you.
Moving on, let's discuss about major distinctions of the types of financial markets. First, money market versus capital market. Money market are used for short-term purposes, short-term or probably for borrowing, and usually the assets are held for 1 year or less, whereas capital market used for long-term purposes. Capital market has a higher possibility of default of the credit of more than 1 year of maturity, and the risk of interest is also higher. On the other hand, investors who enters capital market are risk takers. So the most important aspect of a money market is that it is liquid and can be easily turned over at low cost and offers an ability to balance lenders' short-term funds and borrowers' requirements. When short-term debt is presented, this is mostly for a company or government to finance overhead expenses or working capital and not for capital improvements or large-scale projects. Next is bond market versus stock market. A bond is a loan investment, so which means an investor is actually loaning money to an entity, so like a company, government, or municipality. A stock, on the other hand, is an own investment wherein an investor purchases stock, actually owns a piece of that company. So basically, When an investor buys a bond, he is loaning money to a company in exchange for regular interest payments. So when he buys a stock, he is buying ownership in a company. So lastly, equity debt market versus equity market. So actually they are similar to stocks and bonds. So stocks, also known as shares or equities, are bought by investors who want to share in the profits of a company through dividends or the appreciation of the stock's value. So if the share price rises, investors can sell stock to another investor at a profit. So if it falls, they might sell them at a loss. So bonds are a form of debt. So like equities, they are issued by a company or government in order to raise money. So at some designated point in the future, the issuer has promised to pay the bondholders back. So in the meantime, bonds can be sold to another investors in the secondary bond market. So to discuss more about stock market, let us hear it from Ms. Amabel Yugo.
As a continuation, let's talk about stock market. As defined, stock market refers to the collection of markets, exchanges, where regular activities of buying, selling, and issuance of shares of publicly held companies take place. Basically, it serves as a market for all of these companies who want to sell their stocks or shares to the public. In the Philippines, we have one stock exchange, and that's the PSE or Philippine Stock Exchange. Currently, we have around 330 publicly listed companies. And when we say publicly held companies, it refers to the stocks that are owned and traded by public individuals and institutional investors. In other words, when a company decides to sell their stocks or shares to the public, that's when they transition from privately held company to publicly held one. We put more emphasis on stock market because the higher the risk, the higher the reward or return is. Hence, it gives rise to financial security. Therefore, stock market is very essential in the scope of financial market. Now, I'll give the floor to Rhea.
Con- to continue about stock market, the stock market act as a primary market and a secondary market. So in the primary market, it allows companies to issue and sell their shares to the common public for the first time through the process of initial public offerings or the IPO. This activity allows businesses to raise money they needed from investors, and in essence, it means that a corporation divides itself into a number of shares and sells a part of those shares to common public at a price. In here, stock exchange acts as a facilitator for capital raising process responsible of ensuring price transparency, liquidity, and fair dealings. Talking about secondary market, it follows the first time share issuance in IPO. Investors trade previously issued securities without the issuing company's involvement. Stock exchange here serve as the trading platform that facilitates buying and selling of the listed shares. Next slide, please. So how prices are set in the stock market? So prices are set through the auction process. What do we mean by auction process? So it is where buyers enter into a competitive bid and sellers submit a competitive offer at the same time. So when we say bid, it is an offer made by an investor or a trader in an effort to buy a security. It is a price at which a market maker is willing to buy. So when bid and offer coincide, trade is then made. So I guess that's the overall presentation of the market group, and thank you for listening.
Okay, thank you. So this is group 6. Okay, question for for group 6. Um, we already have these days, no, the emergence of what do you call this? Digital banks, fully digital banks. Although some of the more traditional banks are trying to open a service line which is electronic banking, but digital banks are really not exactly, you can't say ba na a digital bank is can be totally replicated by a traditional bank, which offers electronic banking services. So there's actually quite a distinction there. So how do you see the future of banking in the light of us being in this age, internet age, AI, Internet of Things, and then there's the rising superstar of finance, which is the Bitcoin pagyod. So what do you think about this, like digital bank versus traditional bank with electronic banking services? Any comment on that?
Oh, hello, good morning. So I think the future of banking will be technologically driven, because even as early as today, we now have a very much electronically driven banking services such as the ATM. So that alone, really, we can see that the banking services will really be automated, most especially in the future. We the emergence of also in the kind of Gcash, the PayPal is really an example of online banking. So that's it, ma'am.
Okay. Okay, thank you. Okay, group 3. Okay, we can see it now.